So good afternoon, everybody. Apologies for the little bit of a late start. For those of you who are not from Columbia, welcome to the School of International and Public Affairs. My name is Trish Mosser. I am the director of the Program on Economic Policy at SEPA, as well as the school's initiative on central banking and financial policy. Along with my co-sponsor, Catherine Judge from the law school. I'm very pleased to see a good turnout for today and for this discussion of Paul Tucker's recent book, Unelected Power, The Search for Legitimacy in Central Banking in the Regulatory State. We all know that governments delegate certain economic policy making responsibilities to their central banks, nearly always monetary policy, sometimes financial regulation and supervision and financial stability authorities as well. In practice, how that's done varies tremendously. It's frankly that delegation is sometimes a little fuzzy and sometimes even a little internally inconsistent. Paul's book looks very carefully at the state of delegated powers to central banks, particularly in the US and the UK, and he offers several proposals for making delegation both more effective and consistent. Paul is a senior research fellow at the Harvard Kennedy School, and he's the chair of the Systemic Risk Council. Previously, he had a long and varied career at the Bank of England. He served as executive director of markets, as well as at the end of his career there, deputy governor responsible for financial stability. Paul and I worked together quite a bit, about 10 years ago. Quite a lot of it in the middle of the night over the phone, frankly, particularly in 2008. So I'm very, very pleased that he's here and we have this opportunity to have him talk about a subject that I think, frankly, is understudied but unbelievably important. After Paul finishes his remarks, Sharyn O'Halloran will discuss and comment on Paul's book. Sharyn is the George Blumenthal Professor of Political Economy, as well as a Professor of International Affairs at Columbia. She's also the Senior Vice Dean and Chief Academic Officer at Columbia's School of Professional Studies. But more importantly for this event, her book, Delegating Powers, is a bit of the go-to reference on the way that legislature has delegated power, particularly economic policy making, to executive branches and to agencies. So it is very fitting and wonderful that she's here today to provide some comments and thoughts on Paul Tucker's book. Finally, Kate and I would like to thank the sponsors of this event, and you can tell how interdisciplinary this subject is from the nature of the sponsors. The Richmond Center for Law from the Law School and the Business School, SEPA's Center on Global Economic Governance, Columbia Law School, and the Program on Economic Policy Management here at SEPA. And with that, I'll turn the floor over to Paul.
Thank you very much, Trish, and thank you very much, Kate. It's a real treat to be here. If you spent most of your life in public service, for those that don't know me, I was a staffer for 20 years before the 12, 13 years I had as a policy maker, and then you branch out and write a book. You don't care about being criticized, you just want to be taken vaguely seriously, and so I'm flattered to be here at all. This is a book that, it's not particularly about economic policy, it's about economic policy institutions, and so it's a meld of public law, political theory, and political science, as well as political economy. And it dwells on a problem that, in my mind, is prompted by central banks, but isn't particularly about central banks. There are some former central bankers, very senior central bankers in the room. We were very powerful people, very, very powerful people. People that were powerful in ways that would have been surprising to elected officers in this country or the United Kingdom or France a century or so ago. The growth of unelected powers in our societies is remarkable, but it's not restricted to central banking, but it is incredibly marked in central banking. I argue in my book that central bankers are today the poster boys and girls of unelected power alongside the judiciary and military. And I also argue in the book that there are things to be learnt from both the judiciary and from the military about central banks. But the most important thing to say this evening is we've spent hundreds and hundreds of years thinking about how the judiciary and the military fit into our democratic republics in very different ways. And yet we've hardly spent any time at all thinking about how our values fit with, how our political values fit with unelected central banks and unelected regulators. The reason central banks are unusual and particularly powerful is essentially twofold. One is that latently they have quasi-fiscal powers. If you are the issuer of money, you can suddenly could create a huge amount of money out there, create surprise inflation which would redistribute resources between creditors and debtors. You can, in some countries, including this one, and in continental Europe, you can set the steady state rate of inflation which determines the level of the inflation tax. John Locke would have been a bit surprised by this. But on top of that, most central banks, particularly after the financial crisis, have regulatory powers as well. And when we talk about regulatory powers, when economists talk about regulatory powers and regulators talk about regulatory powers, it tends to be very techy about regulations. What are regulations? Regulations are legally binding norms backed by the coercive powers of the state, the monopoly coercive powers of the state. This is lawmaking. It is lawmaking, and John Locke would certainly have objected to that. And those people in this country who object in principle to the regulatory state, or the administrative state, as it's typically described here, regularly wheel out John Locke, and actually have very peculiar debates about which part of the English 17th century they like best, why it goes down so well here. We think it's quite peculiar, that debate. So the problem that I'm interested in is, do we have too much power in unelected hands? I am prepared to assert that the marginal lawmaker in this country is an unelected regulator or an unelected judge. And as I've mentioned Locke twice, but this would have been surprising to Montesquieu, and it would have been surprising to James Madison as well. When they laid the principal basis for constitutionalism, for the separation of powers for a three-branch state, this kind of mushrooming of an administrative state would not have occurred to them. That doesn't make it a bad thing. It's that these people were doing theory and practice, but those three people were each very, very engaged with practical issues. Madison very obviously in this country, but John Locke very much so in my country, returning from exile in the Netherlands to help reshape the UK Republic at the end of the 17th century, beginning of the 18th century. And so what my book is, and this is kind of audacious, and so I want to be taken seriously more than I want to be agreed with in a way, is the book is about proposing principles of delegation that fill a gap in constitutionalism. There are four high-level themes of the book, which I'm not going to dwell on this evening, but you should be aware of. At a very basic level, it argues that legitimacy should be taken as seriously by political theorists as justice. For since I was a boy, just going into teenage years, justice has absolutely dominated debates in political theory, essentially because of John Rawls and to a lesser extent Nozick. And I want to put legitimacy up there with Bernard Williams as the first political question. It is the legitimacy of our institutions of government that enable us to debate and pursue justice at all, and therefore principles for the legitimacy of our governing institutions matter enormously. Secondly, the book is a contribution to the debate about technocracy versus populism. Now, most engagements in that debate are about populism and how dreadful it is and how to contain it. And there are some fabulous, fabulous books about that. My book is about the same subject, but from the different end. It's about technocracy from within technocracy, and it's essentially saying technocracy should retreat a bit in the interests of our way of life, in the interests of our system of government. And something that perhaps we could talk about later is that I think that when in this country the Fed faces criticisms framed in terms of the rule of law or framed in terms of participatory democracy, the Fed's high officials need to find ways of engaging with those high-level principles rather than just the narrow economics. The third thing, which may go down less well here, is that the book argues that legal liberalism is insufficient. Not that it's not necessary. I argue that liberal principles and legal constraints, judicial constraints against the arbitrary exercise of power are absolutely vital. But I argue also that in a democratic republic, they cannot be sufficient unless we are prepared to jettison our democratic values. And in a sense, I think part of the problems that we face now on both sides of the Atlantic is that we have drifted into a form of undemocratic liberalism, and we shouldn't be surprised, for reasons I will describe, when some of the people get pretty fed up about that. So the book is about how our deep political values should constrain rational choice institutional design. So someone that thinks it's all about welfare and only about welfare will either disagree with this book or find points of challenge that they haven't engaged with before. And the center of the book is what I call a political values robustness test, where I kind of frame some rational choice design principles for independent agencies, and then I ask the question, how do they stack up against our deep political values, plural political values? So why does legitimacy matter? So I would probably only say one thing this evening of which I'm absolutely certain that it's true. And observation suggests, but for some of us experience suggests, that government occasionally screws up on an absolutely gigantic scale. And in ways that aren't just, don't just harm the people in a minor way, but harm the people in a massive, massive way. That's what the financial crisis is. That when I first started writing this book, some friends of mine, very eminent economists, some of whom have won the prize, some of whom I hope will win the prize, would say to me, but it's only results that matter, Paul. They've changed their mind slightly since 2016. But it isn't only results that matter, because actually you are destined to be delivered bad results occasionally. And the resilience of a system of government lies at the heart of why legitimacy is important. And the reason, one of the ways in which representative democracy is so incredibly wonderful, in ways that other systems of government are not, is that it separates how we feel about the system of government from how we feel about the government of the day. That when failure is unleashed upon you as citizens, you can vote out the people that let you down, because we can sack our governors. Except that you couldn't vote me out, and you couldn't vote out the people sitting in the back row and elsewhere in the room. And I believe that this is liable in slow motion to erode trust in the system of government, unless delegation to independent agencies is principled, and those principles are widely understood. So constitutionalism is kind of what this exercise is about. And let me say something very quickly about other countries, because an assumption of the book, which I try to defend, is that the political values that I deploy are shared across the United States, the United Kingdom, France, Germany, and elsewhere in the EU. But the way delegation to independent agencies is dealt in those constitutional setups could not be more different. And the most interesting example in some respects, and this is all I will say about Germany this evening, is amongst the advanced economy democracies, Germany is almost unique in explicitly providing for the administrative state in its written constitution and the basic law. And it is absolutely unambiguous that every single part of the administrative state shall be under day-to-day ministerial control. There is no room for independent agencies at all under the basic law, with a kind of vagueness about how the Bundesbank was situated before the Maastricht Treaty. Now, I will assert, and of this I am confident but not certain, that that is not what the facts are like on the ground. There are de facto independent agencies in Germany. Somebody who's very experienced, perhaps more experienced than me, is nodding, so I'm pleased about that. So Germany has a very different problem from either the UK or the US. In France, the written constitution provides indirectly for the administrative state, and the Constitutional Court provided that the Prime Minister and ministers may delegate rulemaking power to agencies that are insulated from politics. And the Conseil d'État, which is the top administrative law court, as the lawyers amongst you all know, France has a Kelsen system with a separate constitutional court and administrative law framework, which I think is rather good, actually. The Conseil d'État has provided that independent agencies shall be truly insulated from both elected branches. So no provisions of the kind that exist in the UK, where there are override powers for the executive branch. And this led the Senate a few years ago to say, this is all outrageous and there are far too many independent agencies. And a few years later, the French Assembly and the executive branch passed a law, a generic law, that provides for the structure of independent agencies. So this would be a structural equivalent of the APA, the Administrative Procedures Act here, except that it's about institutional design rather than administrative law process. And also decided that I think 5 or 6 of the agencies that under primary legislation were independent actually didn't meet the criteria and therefore no longer were independent. One of the great surprises for me in researching this book, just shows you've all got prejudices, mine of course are English, is that France had actually thought about these issues more carefully than anyone else, which who would have guessed that sitting in London? My country of course has complete flexibility and therefore I won't say anything about that. So US doctrine on the administrative state is interesting, and to use an American expression, I kind of obviously defer to lawyers in the room about this, but first of all, the court has allowed the administrative state to exist, provided that the delegated regime has an intelligible principle. The quotation marks are very deliberate, and I will come back to those. The court has allowed Congress to stipulate case by case that an agency's policymakers can be sacked by the president only for cause, so the president can't get up in the morning and decide that Don or Stans doesn't like their clothes, fed up with them, they're out, which President Roosevelt tried to do with the Trade Commission, I think, a long time ago. And the other piece of doctrine, which is almost unavoidable, is that agencies should be regarded as the executive branch, and because only Congress can legislate, so what agencies do are merely filling in the details. And of course, for those of you that know how all this works, what it means by different countries live by different myths, and there are lots of myths going on there. So here we are, and at this point, I am not distinguishing at all but between different degrees of insulation. The FCC, the Communications Commission, its objective, and I'm quoting selectively, to pursue the public convenience, interest, or necessity so as to provide a fair, efficient, and equitable distribution of radio services. Well, I wouldn't feel very constrained if I were given that as an objective. The Energy Regulatory Commission, to ensure that utility-type charges are just and reasonable. The SEC, to deliver a combination of investor protection, fair, orderly, and efficient markets, and capital formation. The Federal Reserve, the safety and soundness of banking groups. And of course, the problem here, I mean, the concept of intelligible principle has just slipped away. It's a term of art. I mean, formally it is met because the court hasn't struck out these statutes. Had a fantastic argument with a very famous US constitutional lawyer about this, but I say in the book, this is neither principled nor intelligible, actually, and I'm serious. This is not principled in terms of delegating power to people like me, but the court does it because it's constrained by various incentives of its own. So at this point, I should introduce some definitions. By an independent agency, I mean an agency that is insulated day to day from the politics of both elected branches. And the attributes of independence that matter in this respect are control over the delegated policy instruments, job security for the policymakers, not life tenure, and budgetary autonomy, or at least not having to go back to Congress every year for your money. So on that definition, to be clear, the SEC, the CFTC, the FTC, the FCC are not independent agencies as I define them, essentially because they have to go back to Congress every year for their money. And just to take the SEC, I've known most, conceivably all SEC chairs since the mid-'80s. I mean, they're highly sensitive to the need to get their money from Congress. The Consumer Finance Protection Bureau is an independent agency on this definition and on the principles I will set out. It shouldn't be. The Fed and the FDIC are independent agencies, and the UK has just got loads of things. It went from having none to having lots and lots, probably more than the US and more than it should have. So what's the justification for delegating to independent agencies? Well, the one that was popular during the New Deal, articulated most forcefully by James Landis, one of the high priests of the regulatory state in this country, was about expertise. That his view that had been building since Woodrow Wilson was that the world had become terribly complicated and what you needed was experts, and the old separation of powers didn't really matter, and what you needed to do was kind of have agencies that brought expertise together and they could write rules and check compliance and adjudicate enforcement proceedings. And I argue in the book that this simply doesn't work. You could have, as a justification, you could have an independent commission that gives public advice to a political decision taker. I mean, I don't want to argue that expertise isn't necessary, but it can't be the end of it in the way that Landis made out for a long time. I think we get closer to it in thinking about the need for credible commitments. Some policies require trust in the ability of the government to deliver on the objective, to deliver on their promise, to be effective. If you declare your objective as a 2% inflation, but actually everyone thinks that everyone on that side of the room is a worker, everyone on this side of the room is a manager or a capitalist, and if you all think on both sides that inflation is actually going to be 10% and you reflect that in your wage bargain, it's going to be very difficult for any central bank to deliver 2% unless they're prepared to have a God almighty recession. And Paul Volcker's come around only perhaps once in a very long while, which is why his achievement was so remarkable. Politicians find it hard to make promises that will be kept because they're coming up for election, and they will optimize to welfare today, not necessarily their own welfare, maybe your welfare, because it's how you're feeling as you go into the ballot box that will affect whether she or he is re-elected. So for technocrats, and there are some conditions for this, a technocrat, you may be able to harness them, how much they care about their public reputation, their professional reputation for delivering an objective that they've been given. This is an echo of an old, this is in the economic literature, but what's going on is an old Republican idea of honor. I mean, that people care about the esteem with which they are held. So let me quickly scamper through some of my principles for delegation and say something about a few agencies on the way. And my principles for delegation include criteria for whether to delegate, design principles for how to delegate, and if I have enough time, I'll say something about multiple mission constraints. So for whether to delegate, I think the most important thing are that there should be a problem of credible commitment, as I've said, but also that there should be broadly settled public preferences behind the purpose. And that sounds more anodyne than it is. So there are probably many people in this room that are utterly fed up with the Environmental Protection Agency over the last 2 years. But there are many people in this country, not just in the business community, who are not, who are applauding what the EPA is doing. There is not a publicly settled, there is not a public consensus around environmental objectives, and people may wish that there were. I would argue that there's not a constituency out there for high and volatile inflation. There kind of was. When I was born, I think there was, because people believed different things about economics then. There's not a constituency out there beyond a few hedge funds, perhaps, but I'm going to say they don't count, for financial crises, that we need more financial crises, and when they come along, we really need deeper financial crises. I mean, those are areas where the purpose, at least, has broad consensus. But credible problems of credible commitment run throughout government, and so again, that can't, even if it's necessary, it can't be sufficient. And somehow we don't want to delegate choices, underlying choices on distributional issues or our high-level values to unelected officials. And I hope there'll be questions about QE in that regard, because I think the distinction between a distributional choice and an effect important. So where this leads centrally is that you need an objective that is clear and can be monitored, and that should be set by the legislature and is set after public debate. And this not only insulates you from the politicians, it insulates you from capture up to a point, and it gets over this refrain in the US, which is can be true but is overdone. Personnel and policy is policy. Personnel is not policy if the objective has been legislated and clear enough, because you can get, for those of us who have testified, you can go along and say, well, I met the objective that you gave me. If you don't like the objective, change the objective. And so one of the things I argue for, in the book is that we need a revived non-delegation doctrine within an intelligible principle in terms of a monitorable objective for independent agencies. I think the precepts for other kinds of agencies are different. Other things I'll mention is that I think it's tremendously important that decisions be taken on a one-person, one-vote basis after deliberation. This disperses power, a good Madisonian value. Crucially, it aids public debate by highlighting where the differences are. Where there is unanimity, and this is happening in the UK in some fields, it's hard for political overseers to see where the issues are. And if they can't see where the issues are, political, congressional, parliamentary oversight is impaired. And finally here I will mention that there needs to be transparency sufficient to underpin accountability to the elected assembly. And I'm going to put that very briefly, but that is at the center of the book. Let me say one final thing. I think the hardest set of cases around emergencies, and I disagree with a number of very good friends who've served in the administration in this country. None of them are in the room, just to make it clear, although the people in the room may disagree with me as well, about what should happen in an emergency. And there are two kinds of emergency that are relevant to my old world, central banking. You are clearly within your legal powers, but you're about to do something that no one ever remotely contemplated. And secondly, you might be about to go beyond your legal powers. On the first, where you're within your legal powers, but you're doing something that would strike most people as unimaginable, and I would suggest setting a negative interest rate, and Switzerland counts as that, I think it is politically prudent, given our political values, to ensure that the people in political office don't think you're about to do something absolutely dire and crazy, that they can't veto you, but you should know where they stand. And I don't think that is qualifying. But people often say, well, that would qualify independence. But, in an emergency, you're in kind of different territory. So I would have had Mario Draghi going to the Council of Ministers in intergovernmental mode before he rescued the euro area and made himself the economic sovereign. I think he did a great job, but one of the reasons that the ECB is in very deep political trouble in Europe is precisely because they do appear to be the sovereign, that they are more so than the Parliament or the Council of Ministers. Another example, more important here, is should you go beyond your legal powers? And there are people, very wise people and who distinguished in office would say, if necessary, yes, you should. And I think it's one thing for the elected executive branch to do that. I think it is a terrible thing for someone in unelected office to do that. And instead, I would have Congress, Parliament delegate to the executive branch an ability to change the powers of the Fed or the Bank of England or the ECB. And sometimes it's, well, they wouldn't do that, and they would never do, Congress would never give that power. And to which I said, well, then accept the constraint. Accept the constraint and don't blink first. And don't think that, don't treat this as though it's a one-shot game. Remember that even if you do save the world, you can build up resentment that will have powers taken away and make it harder for you to save the world again. Don't conduct yourself on the basis that crises are going to come around only every 80 years so that no one will remember how you behaved last time. So I have a deep disagreement with people about that. Let me say something that illustrates this about prudential supervision, and then I will stop. So it is widely argued in my old world that it is absolutely essential that prudential supervisors of banks should be independent in the sense of insulated from politics. And there are famous stories in this country of senators interfering with bank regulatory decisions. John McCain was involved in that once, and actually he was the least involved and was the most open about it being a mistake afterwards. And this principle of independence is in IMF principles and Basel principles and all sorts of other things. At the same time, supervisors themselves will say, we can't tell you what we're doing, because if we told you what we're doing, it could undermine the purpose of trying to keep banks safe and sound. I mean, this is the ultimate trust us regime. Give us these powers, make us independent. I'm afraid we're far too delicate for us to tell you what you're doing. I came to the view, thank God, shortly before I left office, that this is an absolute disgrace given our political values, that it would be better to have banking supervision under political control than have independence without transparency and without accountability. There are lots of other things to discuss, but I'll finish there. Thank you.
So thank you, Paul. That was a tour de force over several centuries of political theory and its applications. So thank you, actually. So I think Paul introduces the concepts of the administrative regulatory states to a new area, central bank. It's been implied, but in very different ways. And this is really a political theory, understanding of the administrative state, understanding of political institutions in a very different way than other people have thought about those and applying it to central banks. So I think this is important. It's to a new context when you're talking about parliamentary systems and in comparative setting, and to a new audience, talking to policy makers and generalists, to the population as a whole. And I think this is a very important contribution, and I truly believe that. Also is a book, I looked it up, I Googled it, it was very well reviewed, the Wall Street Journal and everything, so congratulations. So you must have been taken seriously, if not agreed with. And I definitely encourage you to take the time to sit down with it and to think hard about some of the big notions that are and concepts that are being brought forth. While some of them are very deep and nebulous a little bit, I think they're important for us to think about our governance issues going forward and before perhaps the next crisis happens because you can't do this during a crisis. The question Paul asked is if allowing an independent agency, and I would really say any, whether it's an independent agency or a regulatory agency, we can let that question go because that definition, I think, is a hard definition. So I'm gonna be a little vague. And in this case, say, let's look at the Bank of England, because I think that this is of unelected officials, and that would be, in your case, you're really talking about yourself, really, is to make legitimate decisions, right? And I think this, in some ways, is a very personal discussion. It's like deeply felt.
No, that's right.
And it comes out that way when you read it, because it's not just someone who does a very analytical view of, this is what Locke says, this is what we're so, and our natural state would say. No, this is sort of like, would you really want to do that? And wouldn't you feel angst about that? And don't you, So in some ways, it's a very different approach to an intellectual question and an intellectual, really important public policy question. So, and he brings that approach, which I think is very appreciated, to what are some of the oldest debates. And these debates go from Montesquieu and Locke, and about questions of government forms and delegation in government institutions. In Germany, you always have to go back to Weber, right? Because he thought of everything.
That's exactly right.
That's right. So he thought of everything before, so that's why they're that way, right? Okay. But I will say, Hegel, that's right, Hegel and Weber, right? I would say that while Madison and Montesquieu and Locke might have been deeply disturbed about the notions of the regulatory state, Hamilton, on the other hand, would have been very happy. In fact, he was the first secretary of the Treasury and the first secretary of the bank, of the National Bank.
Yeah.
And he saw that was absolutely necessary for a government to have that types of independence and the capacities of it. So, of course, then we had the Jacksonian era come, which was the Trump of his day, correct? And completely
Yes.
go for the greenbacks and take not want any national control over monetary policy and so on, and rip them apart. So you had that go back and forth. So that debate was actually taking place then, in many ways, even during that early point in American history and the formation of our governments in monetary policy.
Yes.
Okay.
Yes.
So I think I just wanted to put that in the context.
Yes.
But this really, when you step back, brings us to what is the fundamental question, back to the Federalists, right, which Americans always think is as sort of our Bible in this, is a notion of Madison's dilemma, right? And he clearly states it that it's sort of like this balancing act, right? How do you give agencies enough, or even government enough authority to do the job right? But then at the same time constrain their incentives to use the power in pursuit of the public interests, right? And it's always if men were angels, and then, we wouldn't need government in many ways, but we do. And so how do you balance those two pressures? And this is how do you think about delegation and agency issues? And this is where a lot of the legitimacy questions really began, at least in this literature. And there are two questions that come up. First is, when do you delegate? And then how do you delegate?
Yes.
Right? And you're right. When do you delegate? You have to say, well, can you delegate? And this goes back to the non-delegation doctrine. And once we've gotten over that hurdle that you can delegate substantive authority, not just have the government, push buttons or do something, but actually fill in the gaps, as it was, and then write rules, implement. And that does have substantive change to policy, in essence, or substantive policy writing, as dictated within the legislative statutes, then that is we are in a different situation than just Congress drafting very detailed laws that the executive executes by default. Okay. Now, if that's the case, then the question really moves to, well, then how do you delegate? All right? So now you have a question that is not, now, it's a binary choice, but really you want to think of it not in those terms, but in the terms of a continuum. And the continuum that the field has moved, and this is usually from us understanding it in a principal agent context, is a notion of discretion. That is, how much leeway do you give the agency, regulators, or so forth, to move policy from where it was set within the legislation, right? Move policy from the status quo, right? And then this is what it's known by delegating discretion, okay? So you delegate authority to the regulator, the agent, to take actions on the legislators, the principal's behalf, all right? Now, at this point, I become self-referential, okay?
That's what we're hoping.
Yes. I didn't get up and do my model. I didn't get up and present my data. I was so good. No. But there's a standard delegation model, which is over 20 years old, okay, which I'm the author of. And there's really sort of two key drivers in this. And there's now a cottage industry of, tweaking this model, right? So basically, though, it boils down to how much discretion or delegate you delegate is driven by conflicts of interests, right? Preferences between legislature, the body, whether it's a median voter, the supermajority, however you want to define it, and the agency to whom you're delegating that authority. In addition, it also has to do with the policy area that you're looking at, the uncertainty that occurs. All right, so if it's an area that is well informed, we understand the outcomes, right? You have one set of outcomes, and then if it's uncertain and you need a lot of expertise, you may want to delegate. And there's a trade-off that goes on, and then you go ahead and find your optimal, right? Okay, we can do all of that. Now, one way to look at it is things like divided government. There's a bazillion ways. It doesn't mean that divided government happens. It's really the policy preferences. And so that's just 25 years ago, that was a good way to do it, right?
Yeah.
Okay.
Yeah.
So now, the amount of discretion is not just the amount of authority that's delegated, and this is going to go to some of your notions of independence, of an independent agency, but it's also the amount of procedural constraints, and this is associated with the APA, and this is above the APA, right? Above arbitrary and capriciousness and so forth. The amount of procedural constraints, the reporting requirements, the budgetary requirements, sunset laws, all of those types of things that limit the agency's use or the regulator's use of that authority, okay? Now, there is, again, besides the modeling, there is a whole cottage industry that goes on and takes the laws, big databases, both of manual coding, hundreds, thousands of laws all over the place, and now using natural language processing, big data techniques to go ahead and code these laws with different types of metrics. It's been done in the US, actually for financial regulation laws. It's also now been applied to the EU decision-making with regard, regulatory structure with regard to financial regulation. So there's, these are the types of things that happen. It's ongoing. And then we're going to see over time that you do see delegation and constraints occurring, and you do see different types of patterns changing over time between the regulatory agencies and differences as preferences change, okay? So the question then is, do we really want some of the principles that you're suggesting. Now, of course, this goes back to the principles versus rules.
Yeah.
But we're not gonna,
Yeah.
we won't do that. But the broadly settled preferences, well, actually, we're never gonna have that, right? We're never gonna have broadly settled preferences in EPA. One, because the policy changes, the areas, the technology changes, and what you want, and the reason why you delegate to agencies that are experts and then can constantly update and respond to new information is because it's changing over time. And it's really hard for legislators to constantly be legislating. Even in cases like financial regulation, if you look at the number of laws they're passing a law at like every 2 pieces of laws every 2-3 years. That's a huge amount of legislating, and these are large, complex laws. That's a lot of legislating. And so you have to ask yourself, why do you delegate, right? First of all, whether that in fact would be a principle that you sort of lose the benefits of delegating by saying you have to have that in place before you would actually ever delegate. Now, a credible commitment. Yes, you want a credible commitment so that that when you set a policy, it's insulated and it just doesn't unravel all the time. However, at the same time, you do want to make sure that a policy's in place. There are means that if in fact that policy goes outside of the preferences of the enacting coalition, there are means to override that. So in fact, if you were to take actions that were outside the scope of your authority, the legislature should override you. There should be enough concerns that they would actually either kick you out of office or write a piece of law that says you can't do that, all right? And that would be the limit. There's 2 limits, that or the courts. And that's really the way in which we would think about the constraining aspects of it. So in some ways, the principles you're suggesting should be in the administrative procedures themselves and the design of the delegation, not necessarily the before I delegate or why I would delegate in the beginning. So let me go back to my nice things. So, in any case, I would like to suggest that he thinks about this within sort of the central bank independence, especially in the parliamentary system. I think that would be really interesting as opposed to a separation of powers system. And to think under what conditions the different types of procedural innovations we use, how do they mitigate the types of ways that either regulators go outside or regulators don't give information or something that could happen. Is it different? Do certain ones work in that context and not in others? Budgetary constraints, rule-making constraints, reporting requirements. I think that would be an interesting exercise. Moreover, I think the delegation literature would really benefit from an understanding of what delegation means in a fused Westminster context, right? Everything's together. And so it's never quite understood. And so that would be helpful. Around that would be helpful in defining what actual delegation looks like. Under what principles is it truly a delegation as opposed to just the cabinet taking actions. So just to sum up, I just want to say let there be a single regulator, right? And the authority that needs the authority to oversee and effectively manage the safety and soundness of our financial institutions for transparency and accountability. But at the same time, the amount of discretion, such as super regulator, which is what you're worried about, will and should have must be balanced with the public's need for transparency and accountability, right, in the regulator's own actions as well. So again, it goes back to Madisonian balancing and Madisonian's dilemma. Thank you.
Thank you, Sharyn. Shall I respond very
Yeah,
briefly?
take a few
to that?
minutes, yes,
Yeah,
please.
thank you very much, Kate. And, well, thank you very much.
You're welcome.
Thank you very much. You're the only person in the room that knows that I mailed you, cold called you, we'd never met, and said, can I come and see you? You've written this paper that I really want to talk to you
Yep.
about. And I cold called quite a few people outside of my, economists will say yes to me, but I cold called people, quite a lot of people, Kate's another, outside of my discipline and background, and some didn't reply. And it's a real privilege and honor. Roberta replied, and you know, I'm hugely touched by that. So I think what you're encouraging me to do, and I wondered about this while I was writing the book, is to offer not only principles for delegation to agencies that are insulated from both branches of politics, but a kind of full-blown theory of a general theory of the administrative state with different degrees of insulation. And for those of you that are interested in the book, I start to get into that in chapter 10. I do offer, I sketch, no more than sketch, suggest some principles for delegation to executive agencies and for what I call semi-independent agencies like the SEC or CFTC. In chapter 3, I take the principal agent framework and say, but some agencies are so insulated that actually we should think of them as trustees rather than as pure agents. So for those of you that aren't in this literature, economics, political science, an agent should all the time be kind of caring what their principal is thinking. That if I ask someone to go to the shops for me, and I haven't quite specified the kind of vegetable I ask them to get, they should be thinking, I wonder whether I can get Paul on the phone, or what vegetables does Paul like? And being a central bank delegated agency or a monetary policy maker isn't like that at all. You're meant to stop thinking about what your principal, who gave you the powers, would want, and instead think about only the job that they gave you, that the original legislators gave you. In the same Congress or Parliament, if they've changed their mind a bit, you're not meant to be too bothered about that. In a later legislature, you're administering the law. The reason it's like a trust deed is trustees owe their loyalty to the trust deed, not to the, it's for the beneficiaries, but not to the current views of the beneficiaries, and not to the settler if the settler changes their mind. But what the beneficiaries can do, and here the beneficiaries of the public, is that they can go and petition the settler actually to go to the courts and get the trust deed changed. And what's going on there, some obstacles have been put in the way of the settler just changing their mind about what's wanted. The settler has to, the beneficiaries and the settler have to go through a process to change the direction in which the trustee is headed. And this can be contested. I think that for some agencies, the metaphor of trustee is kind of nested in the principal agent framework is kind of useful. Let me say one other thing about procedure, and again in political science, and I don't think you have written about this. So there are famous papers in American political science that talk about what's going on in congressional oversight. And the metaphors they use are police patrol versus fire alarm. And they say, well, police patrol can't work because these people are frightfully busy. Actually, in the House, they're frightfully busy doing fundraising so they can get back in. But anyway, whatever they're busy doing, they are just frightfully busy doing it, and they haven't got time to do police patrol oversight, and therefore fire alarm oversight, where members of the public or regulated institutions, firms, complain about things, and therefore they know where to focus their effort. And as it goes, that's true. But that it is, I argue this in chapter 15, I think, of the book. I mean, this couldn't possibly be an adequate description of the utility to our democratic societies of congressional testimony or parliamentary testimony. These are occasions where you get to talk to people who can change your mandate in the language of the people. And I will say two stories from the UK Parliament to illustrate this. One of which is about my own confirmation hearing, and I don't know, I had lots of confirmation or reappointment hearings, and very clever man asked me a question about monetary economics. It shows you could never be experienced enough. And I answered the question in the language of monetary economics. And he said, "Thank you very much, Mr. Tucker. Can you now explain that in words that the British public would understand?" And I felt terribly bruised, and he was absolutely right. And it is just this precious opportunity to talk to the people's elected representatives and generate public debate. The other one, towards the end of my term of office, Mervyn King, the then governor of the Bank of England, and I were testifying. This must be 2012 or 13, so the crisis is still going on. And what you would call the ranking member, George Moody, says to us, and I'm almost quoting exactly, "Mr. King, Mr. Tucker, you come along here and we ask you these questions, and you give us these erudite, eloquent answers, and then you go back to your building and decide whatever you are going to decide anyway. What on earth is the point of this at all?" And, this is going to be on national TV, so this is kind of a key moment. And Mervyn, she's the governor, gives the long answer, and I give the short answer. And unlike, we agreed. And unlike here, if I disagreed, I would have given my answer. In the UK, it is very much individual responsibility. And we both said a variant of, "Well, you're right in the sense that you, Parliament, have passed a law that gives us independent authority to decide interest rates. And it is our duty under the law to go back and decide what we each think is right. But, having heard the kind of considerations that are percolating here and elsewhere. But these hearings are for something else. These hearings are for you to decide whether or not you want to sustain this authority at all, or change it, or repeal it, or amend it in some way. And the public debate that you generate is part of the process where now I'm interpolating where the legitimacy of our independence gets underpinned or not. And I believe that, I think people that hold office in independent agencies must be legitimacy seekers. It is extraordinary to hold these powers, and therefore you have to, even if they want to make it, the elected people want to make it a fire alarm thing, you have some kind of moral duty in a representative democracy to make it something rather richer and more than that. And so I think the political science literature has profoundly important things to say, but that they remain incomplete. And what a surprise, that's the nature of science.
All right. I see a lot of law students and other, actually lawyers in the field. So I want to open it up, and I'll have people line up over here. But given the fact that we have not just political scientists in the audience, and I think that the conversation thus far has been incredibly helpful, but framed more in political economy terms. And one of the things that's so rich about the book is, as Paul said, he came to this from the inside, and then in this voracious manner consumed all of the bodies of literature, which actually operate in very different spaces within academia, and tethered them together, I think, to provide a very thought-provoking account about some of the issues that are most pressing, I think, with the administrative state today, and that I think we're facing as we've looked at the recent elections, and if we look at the powers that central bank hold. But let me push you just for a moment to make this accessible to some of the law students here. And I want to pick up on one of the points that Sharyn made that is something that I also struggled with a bit in the book, which is this notion of broadly settled preferences. And what is interesting for me is you want broadly settled preferences, in some ways an indicia of that's something beyond what lawyers would want it to be. So as you probably are very well aware, one of the recent turns in statutory interpretation has been a turn towards textualism. And this is the idea, if we're looking at a statutory text, we ought to be very closely attuned to the actual language that was used when the statute was passed. The reason for that, or one of the rationales for it, is Congress is an inherently messy body. And that text is not reflecting these broad preferences of the public as then are translated by Congress into this neat process, but rather is a compromise. We have different people who have very, very, very different views. And the only way to get anything done with a bicameral system and the requirement of presentment is such that it is inherently a compromise. And as came out in the discussion this afternoon, looking not just at broad terms at the dual mandate of the Federal Reserve, but actually going back to the Federal Reserve Act, there is no clear goal there that would satisfy your test. And I would dare say, if we actually had to have these broadly settled preferences, you might say, well, nobody wants to have a financial crisis. But what are we willing to do to avoid that? Are we willing to bail out banks? Are we willing to engage in particular types of monetary policy? I don't know if we actually have a broadly settled preference. So if your standards would result in the U.S., and I think the U.S. might be, we could talk about it in other ways, but this is trying to bring in the audience here, in actually a complete elimination of any true independent agencies, does that satisfy you? Are you, because you said then we have to live with it. Are you willing to live with it if it means actually getting rid of a central bank as a truly independent agency as you would define it?
So what do I mean by broadly settled preferences? I mean that over time there's bipartisan support across the two political parties, given the public debate that there has been about a particular function. And the inevitable vagueness in some statutory provisions isn't unique to this country. And so I'll say something about the UK and then pull it back to Chevron doctrine, given the audience. So it may even be in the current statute in the UK, the bank regulator has to determine that whether or not a firm will be run prudently if it's to be authorized. Well, you know, what counts as prudent? And so this would be, you know, a potential candidate for Chevron deference in this country. The problem here is the word deference, and it gets. I think your judges for a very long time have tied themselves in knots about this. So in civil law jurisdictions, kind of forever, the view has been judges decide the law. In the UK, that's been unambiguously the case since a judgment by Diplock in, I think, the mid-'80s. But when it comes to something like that, they would say they give great weight to the authority. Not that I think the rhetoric of deference has been deeply unhelpful here, because what it can sound like is that the judges are delegating their own powers to unelected regulators. And I think the UK courts have frankly done a better job on this than the US justices and the DC Appeals Court over quite a long period. I think another difference would be that, I mean, a problem for the judges here is that given how difficult it is to legislate here, for Congress to legislate, the judges and justices know that if they determine, no, the words only bear this meaning, and that is, you know, absolutely contrary to the policy of the current legislature or administration, there's little chance of getting it changed, which is quite different from the UK. So instead, retreat from determining points of law and instead do hard look and get into the merits to a greater or lesser degree of substantive decisions. I mean, this is something I argue more carefully than this in the book, that This is the wrong way around, actually, and something that should concern people. So I'm using that as an excuse to kind of speak to the law students and lawyers in the room.
And
So,
others,
so I want to follow up on Kate's point a little bit here. So the Fed bailed out some financial firms using 13.3 emergency power. It's very clear when you look at how the particular provisions of emergency authority were added by Senator Dodd some years after the crash of '87, that the intention of the addition to the 13.3 authority was to permit the Fed to bail out investment banks. That had been missing in '87, and the Fed had to jury-rig back-to-back loans, which put in question the survival of the investment banks, and Dodd wanted to make sure that that would not occur again, so he added this provision as part of a related financial services bill that went through. And you can look at the history of the enactment and come to the conclusion that I've done. So it wasn't done by stealth. So it's clear that the Fed has this emergency authority. There was expression of intent that it be available to protect financial firms at a crisis moment. So in effect, now it's not used for a period of time, but when it's but at the moment when we see a crisis occur, it is used. It's very clear that the Fed had the authority, it used the authority, and so what's the issue? I mean, is this really a legitimacy point, or is it something else? And, you know, and in a way, it deals in emergency as opposed, I mean, but how does it seems to me to be kind of inconsistent with the framework that you're selling here about, you know, what the, anyway, so I'll stop.
I hope I am selling. I hope people buy the book, by the way. No, Jeff, there are loads of issues bundled up there, which is great. Let me say a first thing about that, which I think will speak to the former policymakers in the room as well, that this is not just true of central banks, but it's easily illustrated with central banks. If you have some powers, like setting interest rates once every 6 weeks that you use regularly and talk about all the time, but you have other powers that you very rarely use but are going to be fantastically important when in a state contingent way you use them, it is a great mistake. It is a great mistake not to talk about those other powers during financial peacetime so that they are understood, so that legislators and the public and lawyers and anybody who cares to listen can understand how you think about what the powers are and how you would plan to exercise your powers in different circumstances. That Fred Mishkin's in the room, he did as much as anybody to kind of help articulate how monetary policymakers should think about making monetary policy. Which was fantastic and led to huge improvements over a period of 25 years. It has been a great mistake for central banks. Central banks said almost nothing. And actually academia said almost nothing, other than David Laidlaw up in Canada and a few people that object to lender of last resort policy. Very few people said anything about lender of last resort policy for a quarter of a century until it was used. That was an absolutely massive mistake, and one I suspect we can agree with, depending on whether we agree where I'm going now. I think the issue, it's kind of a legal issue for sure in some countries, and I think it's a legitimacy issue everywhere. If, as the central bank, unelected officials, you use the word bailout, if you lend to someone that you know to be fundamentally insolvent, or should know to be fundamentally insolvent, if you had done a reasonable amount of work, not God's view, then what you are doing, given that time subordination exists for a firm in life, but it doesn't exist in bankruptcy, you are allowing short-term creditors to escape whole at the expense of long-term creditors. It is one thing for a fiscal authority, particularly an elected fiscal authority, to do that, because A, it has the powers and instruments to make good the losses of the long-term bondholders, and it was elected. It is quite another thing for an unelected central bank to play God and decide that society would be better off if Kate, the short-term creditor, escapes whole, but Sharyn, the long-term creditor, loses out. If this sounds too abstract, let me put some numbers on it. Imagine there's an institution that has got short-term debts, site debts of 50, and long-term debts of 50, and it's actually bust and only has assets of 50. Well, it should go into liquidation, and you will both get 25 each. If I, the central bank, lend to the institution, Kate will get her 50 in whole. Sharyn will get nothing. Now, the bankruptcy laws were passed by Congress or by Parliament, and who is it for an unelected central bank to decide, well, actually, I will override that? At the very least, in my view, the legislation should have made provision for that. Now, I think this can be cured in various ways that I discuss in my book, but I will assert that the perception, fairly or unfairly, and I don't know what the truth is, and I'm not criticizing anybody ad feminem or ad hominem, the perception that the Fed lent to people that were or should have been known to be fundamentally bust has damaged the Federal Reserve very considerably by amongst reasonable people on the Republican side of Congress and amongst reasonable people on the Democrat side of Congress, although it would matter even if they weren't reasonable people.
Well, let me jump in on that. Well, others again, should jump in on here. So you provided an example where you put numbers on it, and you do provide a very thoughtful analysis in the book, and thinking about this in probabilistic terms. And as you said, and I think this is a critical point, educating the public ahead of time so they are ready to deal with these difficult determinations. But let's make it more concrete for an audience that is used to concrete examples.
Yep.
You said what damaged the Fed is that there was a bailout of fundamentally insolvent institutions. I don't know if that is what was damaging. It was that there were institutions where there were questions about the solvency, and there were inherently going to be questions, because once you get beyond regulated banks, the Fed or any central bank is inherently operating with information deficit, which we talked about previously in terms of the actual solvency, made significantly worse by the fact that you are operating oftentimes in a crisis time, an environment with sufficiently limited liquidity, that being able to make accurate assessments of the value of the underlying collateral is that much more difficult. So the Fed made a number of different decisions during the crisis regarding the types of institutions that were non-banks that would receive help. You are as familiar with these as I do. So one of the things I think that has undermined the credibility is the decision, look, there's Bear Stearns, we're going to provide help to Bear Stearns. Second in line is Lehman Brothers, we're not going to help Lehman Brothers. Third in line is AIG, we are going to help AIG. In terms of subsequent accountability, which is what you are doing a really nice job drawing our attention to, it's incredibly difficult, because if I choose to help an institution, that in and of itself is changing the trajectory of that institution. If I choose not to help an institution, that is fundamentally changing the trajectory of institution. And going back to your point about concerns of conflict of interest, the Fed's subsequent monetary policy was not irrelevant to the ultimate health of the institutions that it did in fact help. And so you are in this very awkward situation where you have a tool that actually is not going to be, so you can say solvency in the abstract, I think makes a lot of sense. But if what you want is actually accountability to the public and to elected officials, given the inherent challenges of the ex post signals that we're going to have, and the potential conflicts, is that really going to mitigate the underlying issues that you're concerned about in terms of making the public feel like this actually is an entity that we can trust to be accountable to us because we have the ability to verify their actions?
So these are good challenges, of course. So the central banks could do a lot better. If I think about when I joined central banking in 1980, almost nothing was said about how they approached monetary policy. Some of you are old enough to remember the Federal Reserve didn't even really announce what its monetary policy was. It would announce something completely opaque about something about putting a little bit more upward pressure on reserves or downward pressure on reserves. I mean, even cognoscenti didn't always understand what it was, and then you would observe where the interest rate was, and that completely changed over a quarter of a century, not particularly led by central banking practice here, more by academics, practically led by central bankers elsewhere. And so one of the things I want to argue is that central banks could be a lot more open about their operating principles for the exercise of lender of last resort powers. They could be a lot more open about the machinery inside they use. I tell you, if any of you ever get involved with it, students here, monetary policy isn't this kind of ethereal academic thing. It's like working in a factory. I was a staffer as well as a policymaker. It is a relentless machine in which you are just part of a cog. I was lucky enough eventually to be a reasonably senior cog. Whereas lender of last resort, there's an element, more here, I suspect. Let's all rush around and what do we think it is? You can organize your fire brigade with greater structure than that. Let me say something about Lehman to be more concrete, because it's 10 years after. And so it is often suggested, this isn't in the book, by the way, it is often suggested, extraordinary, Lehman could have been bought by Barclays, and but they wouldn't, those horrible British officials wouldn't allow Lehman to be bought by Barclays, and therefore the whole world failed. Hank once said this in a room in Harvard at a conference, and the dean of the Kennedy School said, "Paul, do you want to say anything about that?" Hank goes, "Oh, Paul, hi, really nice to see you." And I said, "Well, I'll tell you how it was for us, Hank." And which was, and forgive me for this, Trish, because it's going to be a little bit overstated. First order approximation, our view was that the New York Federal Reserve, had never knowingly not lent to an institution in difficulty that might plausibly be solvent. You have to listen to those words carefully, but I meant exactly what I just said. The Federal Reserve wasn't prepared to lend to it, therefore it is highly likely that it is insolvent. It is also highly likely that they have no idea how insolvent it is if it's insolvent. So if Barclays buys Lehman and it turns out to be insolvent and very insolvent, and Barclays plus Lehman fails, and that brings down even more of our domestic banking system, our government will be faced with the question of whether to buy Barclays. I wonder whether in those circumstances the President and Congress will be up for sharing the burden. Seems unlikely. Oh, thanks, Tim. Thanks, Hank. No. I mean, and why? I mean, as another little, far too much of the debate about 10 years ago here is conducted as though this was the only country on earth, or at least that everything done here was helping other parts of the world, which of course has a lot of truth to it, but it is not the complete truth. Don't read any memoirs. One of the reasons I didn't write a memoir is none of the memoirs about the crisis are worth reading at all. This crisis was so vast and so complicated that even people intimately involved in it, like me, do not know everything that happened, and how could we? There are better books to read.
All right, so we have one last question, and then I think we'll wind up. So, Peter, close us out.
All right. So I wonder if you can help me work through some criticisms that I've sometimes received in thinking through similar questions. So one would be, what we saw after 2008 in reaction to the Fed was really a primal scream. It was not directed at this or that policy, but it was a sense of the radical injustices of watching wealthy bankers paid for from the public fisc. And that in the event of any other similar kind of injustice, if the Fed's name is involved or invoked, we'll see a similar kind of primal scream. And the democratic mechanism through elections is simply too blunt to be able to tease decisions through principles of delegation, through accountability. Now, that will always be a myth, that it will always be a primal scream. So that would be the first. The second is, in your book and in your description, there is going to be legislative maneuvering to establish the framework you're seeking. How do you know that you'll like, once you open the lid on the Federal Reserve Act, you'll like what comes out the other end? Because it's not going to look like what you describe. It's going to go through a legislative process. And you're talking about, in some sense, kind of a radical one. Are you confident that the thing that you'll see is better than the thing we have, warts and all, that we already see?
Thank you, Peter. And I should say, for those of you that don't know Peter Conter-Brown's book on the Fed, you should read it. When Peter was working on it, we met when you were towards the end of it, and I thought it was fantastic that someone who wasn't an economist and hadn't worked in central banking was writing a book about central banking. I think my world made a great mistake in not allowing other disciplines in, and cuddling with the economists in the corner. So let me say two things about this, perhaps two and a half. The first is to take you back to the 1930s. Do you think an even worse crisis? I mean, devastating in this country. What is the face? Whose face do you associate with the measures both to contain the crisis and to reform the system? I'll suggest to you that it's President Roosevelt's. So you think about, we're 10 years on, and who is it that's going around and, the centerpiece of the crises, and whose faces are on the magazine covers again? It's Ben Bernanke and Hank Paulson and Tim Geithner. I think it was a big mistake that given the magnitude of the actions, that neither President Bush nor President Obama fronted and spoke to the American people and explained why what was being done, why it was the banks that were being supported rather than households directly. And a number of people commenting on my book, particularly on this side of the water, say, oh, you think like this because of parliamentary democracy, about this and that. And actually, I think this is the only place actually where a parliamentary democracy is different. That in a Westminster parliamentary democracy, the Prime Minister cannot hide because she or he has to go to the floor of the House. That Gordon owned it. That then we got to the point of action must be taken, he really owned it, and it was him that explained it to the British people. So that's a question of where incentives and values are together. Here, the values are that the president should have explained to the American people what was being done, but somehow the incentives were for both presidents from both parties not to do that. And I think that is symptomatic of the drift towards unelected power here. The other thing I would say is that in this talk, as in others, I have emphasized insulation from day-to-day political control. Actually, in my book, independence from the industry or regulating is just as important. I mean, the fact that the Federal Reserve is perceived to be too close to Wall Street is a big problem. Once upon a time, the Bank of England was perceived to be too close to the City of London, and I think Governor King went out of his way to cure that, actually to the point of overshooting probably, and making himself unpopular with the City of London. But I think in a strategic sense, this was a fantastically shrewd and brave thing to do. It's all the more important for the Fed, given the structure that the Fed has. It is both more likely that the New York Fed will be captured, cognitively, not in some kind of venal sense. And even if it's not captured, it is much more likely that it will be perceived to be captured. Now that says to me simply that the leadership of the Fed in Washington as well as up here, and the presidents around the country, should spend their time thinking about how do we avoid that and how do we avoid the appearance of it. And Mervyn and I used to talk about this, and that the job of the leaders of the central top of the people right at the top of the central bank, it is not their job to think about the unemployment data every day. It is to think about the things that we're discussing, because if they don't, no one else will. And the mistakes you make during peacetime come back to bite you during financial crises. And I've given examples, we've talked about examples from over here, but there would be equally kind of uncomfortable examples from London and from Frankfurt. And so, you know, what comes out of crises you actually brew during peacetime, not during the crisis itself. Thank you very much.
Perfect. Thank you. And thank you all for being here.